think our key differential is that internationally we're very fee based. So, that we do get paid a commission on certain things like life insurances, let's say, but our investment services are fee based. Whereas a lot of people, other advisors that advise internationally, maybe not just domestically, but internationally, are not. So that's one USP. The other thing is our technology. As far as I'm aware, no one has a app that is similar to ours and that does everything for clients. So that really sets us apart. And at the rate that we're growing at, we're the fastest growing international advice business that is in the market at the moment. It's just, yeah. I think over the next 5 years, we've got a very clear goal. So by the end of 2027, which I know isn't 5 years away, it's a bit less than that now. But when we started, it was to get to 5 billion of assets. That's where we want to get to. In the next 10 years, I would hope that we can become the number one international financial planning business and a very big player domestically in the UK as well.
Hello, and welcome to the Achieving Alpha podcast. My name is Stephen, and I am the host of the show. Today, I'm delighted to be joined by Chris Ball. He is the founder and CEO of Hoxton Wealth. In 7 years, he's managed to turn the business into $2 billion assets under management. He has really taken the company from strength to strength. Welcome to the podcast, Chris. It's really great to have you on today.
Thanks very much, Stephen, for having me. Great to be on here and really looking forward to today's episode.
So, how's everything in Dubai?
Everything is good. The humidity is pulling back after the summer and starting to come into the real nice weather now. We've got quite a few months of that ahead of us, as you will know from living in the Middle East yourself during your time. So yeah, we're coming into a nice time. So it's really good. Thanks.
Excellent. Well, it's really great to have you on today. I think today is going to be a nice episode of the podcast. We discuss a variety of different topics on the podcast, and today we get the pleasure to talk about financial planning and wealth management. So it's really great to have an expert on there to talk more about it. First of all, I just want to say congratulations on all your success so far with the business and making your way to 2 billion AUM. That's a big achievement. So, congratulations on that.
Thank you very much. That's very kind of you. Yeah, and it's been a bumpy road like most businesses, but it's also been really enjoyable too. So yeah, thanks.
Great. All right. So, as it's your first time on the podcast, I thought it'd be good to get a more background into your experience. And I think, if possible, we'll start from the start and talk about some of your early work experiences and your early career in financial planning.
Yeah, definitely. So I started my career back in 2004 with KPMG, and I trained with them as an accountant, as a tax advisor. So it wasn't straight into financial planning for me. I left school, so I was on the school leavers program. So you did your A levels, and then I went off to KPMG, went up to their tax business school, sat some exams, and did some work experience, and did that for 7 years. Really enjoyed my time there. Liked, going into the city and working and learning the basics really of what businesses are about. I learned a lot there. I think I realized how lucky I am to have that foundation now, having worked at a big four accountancy business and being exposed to lots of other businesses during my early years. But I think I realized that being a corporate tax advisor probably wasn't for me. I did like the more personal one-on-one interaction. So one of my friends who I went to school with, his dad owns a company called DeVere Group, and I went and joined them in 2013 without really knowing too much on what it was about and actually what was involved. I had obviously a bit of an idea on what financial advisors and financial planning did. We dealt with them when I was at KPMG. I did a big stint in their personal taxation team. So we used to deal with a lot with financial planners. But yeah, I went over with probably a bit naive, I would say, in terms of what I thought it was. And I turned up into Abu Dhabi, um, and I I walked into a villa that was a residential villa, so it wasn't meant to be used for commercial. And this residential villa was where the office was. So I'd gone from Canary Wharf, all glitzy glass, you know, very professional, to probably what some might say is a bit unprofessional in terms of a residential villa being used for commercial purposes with SIM cards strapped to the wall and you had to talk on your mobile phones. And I was like, what on earth have I done? Like, why have I done this? And then I was there for about, I was there for a couple of weeks and I started to think, well, people are doing really well here and they're doing good things. There's no reason that I can't. Um, So after 6 months, I found that I really, really liked it and have been, providing international financial advice ever since. So it was kind of baptism by fire. But yeah, that led me to start Hoxton Capital in 2018, which we've now rebranded as Hoxton Wealth last week. So pretty exciting time for us. And yeah, and that's kind of a very quick checkered history of different, pivotal points so far in my career.
Yeah. I think it's always a good experience when you move to another country, especially quite young, because it allows you to build up some versatility and you get a lot thicker skin and you get a lot more used to the adventure. So I think it's good and it kind of forms the basis of your character as well.
Yeah, it makes you a bit more rounded, doesn't it? I see it a lot with my clients' children that when they, the ones that grow up and live internationally, they don't have as many boundaries as someone that's, necessarily been sat in the same town or the same village all of their life. So yeah, I can appreciate that.
Yeah, it just widens the goldfish bowl. Okay, excellent. And also, I wanted to talk more about what formed the initial idea for Hoxton Capital and what type of problem were you trying to solve when you started to think about it?
So I always wanted to build my own business. I really like the idea of business. So I started quite a few businesses before Hoxton. Hoxton was really the one that took off. So obviously my background is tax. So I started a tax advice business. Then we was doing reclaims for tax for when people moved abroad. Um, they're obviously quite a niche target market. It wasn't a huge available market or market size that we could have, but there was different iterations of Hoxton before. And in 2018, I decided to leave my previous company and decided that I could go and do it on my own, and that was really what I wanted to do. It was challenging because I really enjoyed where I was and enjoyed my time there and learned an awful lot. But at the same time, I knew it was the next step. And what I was trying to achieve from it was to build a place that I really wanted to work in. So, build a business that was really built around me, if that makes sense. I know that sounds quite selfish, but I suppose I wanted to take all the great things from my previous companies that I'd worked at, put my own shine on it and, kind of roll with that. And that was, that's really what I've done so far. Um, it's really build a business that I'd like to work in.
Yeah. And that's the key to it as well. Did you always have that kind of entrepreneurial drive or that entrepreneurial spirit to start your own business? Obviously, during your early years of when you were in a career-based role, but did you always have kind of one eye on setting up your own business sometime in the future?
Yeah, I've always wanted to. I didn't know whether I'd have the balls, I suppose, to go and do it or not. And it was actually my wife that pushed me to do it. And I think that was another thing, and if I look back on it, probably a big reason why all the other businesses didn't work was I was trying to do it alongside a full-time job. So I was trying to build my almost side hustle, I suppose might call it now. But it was always it was never the main focus. And then when I made it the main focus, we had big success with it because it was all my energy all of the time. And it's the only thing I think about. And I only do one thing, which is financial planning. We're not trying to be, 20 different things. So that's really important. And yeah, I mean, look, I can trace it back. I mean, I 10, 11 years old would go and wash cars, and go and knock on all the doors down my street. I remember when I was in sixth form, so I could just drive. I tried to start my own landscape gardening business. I then formed the tax businesses. There's been many iterations of it along the way. I'm sure my dad would probably say a lot of them were stupid ideas, but I always liked the idea of it, whether or not I'd had, but I didn't know anyone that was an entrepreneur as well, really. One of my friends' dad owns a garage, or owned like a car garage, but that was about it. that was about the exposure I got to it. So, it wasn't the norm.
Yeah. Yeah, it's you usually find that people kind of have this entrepreneurial spirit or they don't. As you know, a lot of it is about how hard you're willing to work and how focused you're willing to be on a particular path or route that you're trying to take.
Yeah, definitely.
Okay, and how different is it being an entrepreneur and running your own business if we compare it to what you've done in the past as an employed senior manager in a wealth management company? How different is it running your own business?
Very different. Very, very different. And I think a lot of people have grand ideas that they like. So I've always wanted to run my own business. Doesn't necessarily there's, I suppose there's a kind of difference between working for yourself and running a business. Running a business encompasses making sure that people get paid on time, dealing with HR issues, dealing with regulatory bodies around the world with what we do, making sure that we have, the right technology available, all of these bits, which detracts away from giving financial advice or wealth planning. So, for me, I've always liked that side of it. And I've always, it's been very different. The buck stops with me. Everything is my problem. But, I walked into that eyes wide open. I think a lot of people start their own business and they're what we call accidental entrepreneurs, where they want to work for themselves doing more of what they like, but actually what ends up happening is they do less of what they like, more of the business stuff, which they don't really like. And they get to, it takes time away from what they're really good at. And we see that a lot in financial advice because the barriers to entry, especially in, domestically, like in the UK or the US, are pretty low. But in the UK particularly, the regulatory pressures and the regulatory, upkeep that you have to do within the business takes a hell of a lot of time. So if it's just you and you're having to do that as well, you're probably doing 50% regulatory work, 50% financial planning, which means actually 50% of your time is only spent on money generating activities for you. Um, so it is very different. I wasn't able to focus on everything that I wanted to focus on the whole time, but I'm very lucky now that we've managed to build the business to a decent scale and have good people underneath that deal with all the bits that I'm not very good at, thankfully. So yeah.
Yeah. No, I think you're totally right there. You're right. There are two different types of people. They're the people that happen to have a good idea, but maybe aren't cut out for being entrepreneurs, and maybe don't have the all-round experience or the want or the desire to do certain parts of the business. And there are some people that might not have the idea completely carved out, right? But they have the drive and the motivation to start a business, and they can adapt as things change in the business. So
Exactly.
yeah, it's great. Well, thank God for your wife pushing you into starting your own business. That was a good idea. We need the wives to push us.
Exactly. Definitely. It always takes your partner normally to give you the nod and send you on your way.
The better halves. Yeah. Okay. And how important was it to get your recruitment right in the early part of the process? Because I assume that you needed a pretty strong team around you in those early days where a lot of plans weren't set out and things were up in the air. How important was it to get that right? And did you have any bumps along the way in doing your recruitment early doors?
Yeah, I think recruiting's really hard because it's not something that you're typically taught. Like recruiting is a skill, a really big skill. And if you're good at it, number one, obviously you can go and be a recruiter and earn lots of money doing it, I'm sure. But it also enables you to, there's no I in team. We know that, it's not all about one person. There might be one person at the top that's almost like the figurehead. But generally what you'll find with any team is there's a very, very strong set of people that are below them that are empowering them and being able to do what they wanted to do. So again, having worked at businesses where I've seen that not happen and also worked in big businesses where I've seen the importance of having a good management structure, I realized that getting on the right people who were specialists in the task that I needed at the start was was going to be key to the long-term success of the business. So the first hire we made was an operational person and a compliance officer in terms of a senior figurehead, and that was Paul. And then we brought in a head of marketing, which was Alan. Then we brought in our finance director, which was Charlie. And then we've evolved that out over time. So, we've brought in a lot of senior people that were actually better than where we were, but they've enabled us to raise our game as a result. I've also made some horrendous hiring mistakes as well. Hiring people that I hired my old boss previously. Not that that was a horrendous mistake, but things had moved on, and I think it was very difficult for him to come and work with me, and things didn't work out. And, like you do things like that. You probably in hindsight look back. I mean, hindsight's always 20/20, but you look back and go, I should have done. And I know I probably shouldn't have done that at the time. We've hired people that didn't really want any progression, and that's led us to our core values. So our core values are, we want people with a growth mindset who want to grow and do better, i.e. they don't want to stay pigeonholed in what they're doing today. They want to grow with us as a business. That's really important. We want to grow people who are hardworking and disciplined. So we want to work with people that, are not, we are not an organization typically where people come in at 8:30 and leave at 5. That's not what we do. A lot of guys will work much longer hours. It's not, it's almost, that's just us as a company. And if that's not for you, then that's completely fine. But we try and make that known at the start. And then the last one is no ego. We don't want people, we don't want people in our business with big egos and are ruining it. And that's evolved over time. So we know, those three, as long as we get those three things right, generally, if they've got the skill set, then, of the position that they need to do, and they will fit into our culture, which is really important. We've got a diverse set of people as well. So 16 different nationalities across the business, over 30% of people that work within our team are women as well. Hopefully get that closer to 50% as we keep going. But financial services, as you will know, is predominantly dominated by white Western males, unfortunately. So it's been really good, and we've got a big drive on that at the moment to try and encourage females into our business, especially in the junior ranks and in the senior ranks, obviously, but in the junior ranks to help provide them a career path that they can feel comfortable working in.
Yeah, I'm guess diversity is probably quite important as well, considering that you have clients from all over the world, different nationalities, and obviously a lot of your clients as well will be women as well. So I guess it's very important for you to have that diversity.
We actually find that women are actually best advisors. Sorry.
How comes women make the best advisors? What's some of their strong points?
They're normally very level-headed, and what we find is that they relate quite well. They don't try and rush things as much as some of their male counterparts. So yeah, it's quite an interesting dynamic.
Yeah, awesome. Okay, and how has your services evolved over time from when you started the business to where you are now?
So we started the business as a predominantly working with people on moving their UK assets abroad, predominantly their retirement assets, their pensions. And we've now built the business in, up to kind of 2021. That was a big, big focus of ours. 22, 23, obviously the market's changed a lot. And we pivoted our business to become much more holistic in our advice. So we now, do a huge array of different services. And actually what we would say is the reason why we've changed from Hoxton Capital to Hoxton Wealth is we're wealth planners. That's what we do. And we plan and work with people, particularly on that lifestyle planning piece. So that's really making sure that your finances fit in with your lifestyle rather than just talking about your finances. You have to realize why you're doing things and understand people's values and their objectives, as opposed to, you've got a pension, let's move it and put it into this pension. It's what drives people, what motivates people, and why do they want to, why are they saving for retirement? Why do they have this much money in the bank account? Why is this money put away for a longer period of time versus others? And what really motivates them?
And I guess that's important as well, because as you were mentioning, your clients are mainly global, right? And they might have different pots of wealth in different countries, in different accounts, in different investments. And I'm guessing it's pretty important to bring those together holistically in a single format.
100%. And it's super difficult to do that as well. So trying to get an overview, you've lived in many different countries, but it's if you've got assets in the UK, in the Middle East, in Asia, in Europe, trying to get an overall view of them without having to make a really clunky spreadsheet is super difficult. So we built an app which is called the Hoxton Wealth app, which enables you to consolidate all of your assets in one place and get a real time view across all the different currencies. You can live link investment accounts, bank accounts. Essentially, if it's digitally available, we can normally try and link it. And, our clients, it's a feature that we also offer for free to people as well. So they don't have to be clients of Hoxton's to do that. So yeah, it's in this globally diverse world and with the typical clients that we deal with, it's super important to do that.
Yeah. Yeah, I know, as being an expat for many, many years, how difficult it is to get a real view on all of your finances and all of your wealth. And it's probably part of the reason why I used HSBC for so many years, because you're able to see all your accounts in one view in different countries. So, yeah, that can be really important. Yeah. Okay. And what is your typical type of Hoxton wealth client? What do the majority of clients come to you for? And how do you initially service your clients?
So our typical client is really someone who is probably approaching retirement or who is at retirement. Um, so yeah, our typical client that we deal with is probably not, someone in their 20s. It's normally later on when they start to try and think of that. And it's normally, well, I'm getting close to retirement. I want to start drilling down on that. But again, why we developed our wealth app is sometimes it's not too late, 'cause it's never too late to start doing things. But actually, the earlier you do things or the earlier that you can start to work with someone, the better it is for them. And typically the better, the more impact that we can make. So we developed our wealth app and made it free because as a business, it's very difficult and it's not profitable for us to service a 20-year-old with, yeah, 100 saving £100 a month. The fees, the minimum fees that we would look to charge will gobble that all up. So that it's not good for them and it's not good for us. We want to make sure that what we're doing for them is as good as it can be. And actually for a lot of them, it's just getting your head tuned into, I need to put away something each month, put it into some long-term equity fund or ETF and just leave it there, but just keep chipping away. And the earlier you can do it, the better. So we give them tools that they can use to do that and start to plan. And then hopefully that the hope is on there because they've used our tools and because they've seen us and we provided good value to them at the forefront. Then like your HSBC that offers child accounts, you don't typically tend to move as you go through the journey with people. You will stay with that business going forward. And that's what we're trying to do.
Yeah. And do people go to you mainly to start off with to do with their retirement and their pensions and putting together the right provisions for that?
Exactly that. Yeah. It's retirement accounts. It is, they'll come to us and not, some of it's, but I know I've just had a child. I want to start saving for their education. I wish my parents had done that for me, that kind of thing. I wish, I want to save for my children's a property purchase later on. I want to save for my retirement. I want to make the typical type of things that people come to us, Stephen, is how much and when. So how much do I need and when can I do retire, put my kids through uni, whatever it is. And it's those questions that we will get asked and we try and help them with.
Yeah. And I guess people have a pretty good idea of how much money they have and potentially how much money they need. But a lot of that is, I guess, is based upon timing, right? How can they get to that target within that specific period of time and when they need it? So I guess that's quite important.
Yeah, exactly.
Okay. And what common mistakes do clients tend to make when approaching Hoxton Wealth, or just in general, what you found in your years in financial planning?
think a lot of people make hip shop decisions. They worry about what's happening in the markets. I mean, a lot of our clients, Stephen, aren't day traders. They're not looking to trade and to, make money out of trading. A lot of them are really investing long-term assets. And if you have a long-term horizon with things, then market noise as it happens, you know, sh- y- it's going to be very difficult for them and us to react to that. So a lot of it is actually when you're invested, make sure that, you control the controllable, so you control the fees. You're not locked in to any ridiculous charging structures over long periods of time. The friction costs of your investment are as low as they can, but the key is to start earlier as well. So you've got control the fees and put away as early as possible. Because what a lot of people do is, oh, I can't put away £2,000 a month. So there's no point in me really starting when really it's little and often. And I suppose the third area as well that I would say is that it's this lifestyle creep. So as people earn more, they spend more, and it's if you can control that, then you truly will be wealthy because your income will increase dramatically, but your spending habits stay relatively the same. You might splurge on a few extra things, but if you can control that lifestyle creep, that's a massive generator of wealth over the long run.
Yeah, I guess scale it in proportion to how much extra you're earning, right? So if you're earning a little bit extra over time, you put away a little bit extra over time, and your costs may go up slightly, but you're saving in proportion to that.
Yeah, there was a really interesting thing I saw from Charlie Munger, which he said a bigger house didn't make anyone any happier. And that I was actually watching it with my wife, and I was kind of looking at her, trying to hope that she's
She got the hint.
sure. Yeah, exactly. But it does resonate quite. It does resonate. It's like that. It's a guy who's been extremely successful. Some might say those, him and Warren Buffett are very frugal with their wealth, but probably right. It's spending things that make you happy, not just trying to keep up with the Joneses.
Yeah. Yeah, you're right. I think Warren Buffett's been in that same house, I don't know, since the 50s or 60s, I think. So
Crazy.
it's a long, long time. Okay. And through your experience, how do you think that Hoxton Wealth's services are different from other financial planning services that are out there? What's your key differential?
I think our key differential is that internationally we're very fee based. So, that we do get paid a commission on certain things like life insurances, let's say, but our investment services are fee based. Whereas a lot of people, other advisors that advise internationally, maybe not just domestically, but internationally, are not. So that's one USP. The other thing is our technology. As far as I'm aware, no one has a app that is similar to ours and that does everything for clients. So that really sets us apart. And at the rate that we're growing at, we're the fastest growing international advice business that is in the market at the moment. And I believe we've got really good ambitions and really good people that will work with us. And it's I think that separates us massively as well to our competitors.
Yeah. Okay. And where do you have offices at the moment? We obviously mentioned that you're in Dubai now. Where are your offices at the moment?
So we have offices in Dubai. We have offices in the United Kingdom. So we've got 3 offices there. We've got one in St Albans. We have another one in Birmingham, and we have another one there that we've just opened in Liverpool. We have offices in the US, where we're regulated by Securities and Exchange Commission. Cyprus regulated, and that helps us cover Europe, and then Australia, which obviously covers Australia. So yeah, so most of the major expat destinations. The one that we're clearly missing is Asia, and that's something that we're looking at going forward. But again, I suppose it's about building critical mass in the areas that we're in and providing a good service. But really, what we hope to do is provide a true joined up approach across the globe.
Yeah. And how essential is it to have those offices in the jurisdictions in which you have your clients in? How important is it to have that kind of global feel, but the local touch?
Exactly. And that's the HSBC thing, isn't it? It's the global bank, but you feel like you're there. it's local to you wherever you are. I'd say really important for for the clientele that we deal with, because they are globally mobile. A lot of people do spend 4 or 5 years in one place and then rotate to another. So, it is really important. It is really important that we ensure that we can service them in different areas, and that we can work with them across the globe. I think it provides them a lot of comfort that, assuming their advisor is regulated in the other jurisdiction. So, for instance, we've got guys that are regulated in the UK, in Europe, in US, and in Australia. So that, they look at that and go, okay, well, I'm in the US at the moment. I'm thinking of going to Europe or maybe back to the UK. I can still deal with the same person and the same business, the same look and feel. That, if you're wanting to work with someone for 20 to 30 years, which is the average lifetime of someone with their retirement assets, it's a long, it's a long relationship. You don't want to be jumping around every 3 or 4 months. So you want to deal with someone that can help you regardless of where you are.
And I guess within the confines of your structure, so if someone is to move country, say they move back from Dubai, they move back to the UK, they've got someone local to be able to service them, but with the same ultimate service.
Exactly. Exactly that. And, I think that we see that quite a lot, especially in places like the Middle East, which have historically been very transient. A lot of people do still class the UK as home, and want to be back at home. And actually, the most amount of assets that we manage in terms of overall size is back in the UK. And that's because a lot of people start internationally and then do go back. So, yeah.
Okay, if we take a segue into compliance, because I'm sure that's a major component of your business. Probably, I'm guessing it probably the part of the business that might give you the most headaches and the most sleepless nights. Obviously, there's lots of different regulatory bodies in different countries. They all have different regulations. How do you manage those regulations and those different jurisdictions? How important is the relationships with the governing bodies? And how do you navigate that? And do you have any interesting stories about your regulatory journey?
Yeah, definitely. So, I mean, look, number one, if we all know that providing financial planning or investment advice, financial advice, whatever you want to call it, is a regulated activity in most jurisdictions around the world. I say pretty much all. It's unlikely that they're not going to have a regulatory body that supervises it. So it is important. The second thing for us is that we've not invented anything brand new or outside of the box. What we're doing is very tried and tested, and it's quite vanilla. It's giving financial advice to people who need it. We're not trying to do anything whizzy. We're not trying to, you know, do anything that's in the grey or close to the edge. It's not new and groundbreaking like cryptocurrency or anything else like that. There's a very, very well trodden path in most of the major jurisdictions, especially the jurisdictions that we operate in what you can do, what you can't do. And it's actually very similar across them. The key things will be wording and disclosures will be different, but the main premise is that do what's in the best interest of the client, and don't charge the earth for it. Make sure that you disclose all of the fees and be transparent in how you operate, and you'll get on well. If you kind of stick with those fundamentals, I think you will struggle to go astray. We offer very vanilla advice and very vanilla products. So, it might be a general investment account, and we tell you to invest in an S&P 500 tracker, MSCI World Tracker, global fixed income tracker fund. It's not out there. So I find especially now that it's very easy for the regulators to understand what we're doing. Yes, we do have an international scope of our business, and they are interested, but it's very in tune with what they've seen with people that are local to them. So, our relationships with the regulators are as they should be. We're in good standing, which means we're able to operate in the jurisdiction that we do. We make sure that we file all of our returns. We make sure if they have any questions, we get back to them as quickly as we can, and work with them to provide good client outcomes, which is ultimately what they are there to do, is to make sure that is to protect the consumer, really. It's to make sure that you are operating as you should in their country, which you would hope that they are, and they're there to do a job, and so are we. a couple of years ago, sorry, not like a couple of years ago, last year, at the very start of the year, we kind of had a knock on the door from four regulators, one after the other, which is surprising and quite, that doesn't really happen. I mean, you'd have to be on the radars of them for it all to happen at once. I don't believe in coincidence. And the reason why, which we didn't know at the time, was that there was a company that was operating in our space called Bright Advisors that had essentially was not operating as they should have. They were a different business to us. They were holding client money, whereas we don't hold any client money. But it was that they weren't doing things that they should, disclosing things that they should, and therefore the attention on the space that we operate, which is quite niche in terms of financial planning, international financial planning. If you were in a country or a regulator that has substantial teeth, I suppose is probably the best word, then they want to know what you're doing. So they came knocking. We went through a very long process of getting them to understand our business and how we operate and what we do. But also, I think that that's been a blessing in disguise because we now know what's important to them and what they want to see. And, like with any regulatory inspection, like with any audit, there will always be areas that you can do better. And it's important to know those areas that you can do better and that you can improve. So we took that as almost, something that we'd probably pay a lot of money for a third party consultancy company to provide us with to come in and do. We're obviously able to operate and continue to operate in all the jurisdictions that we do with no restrictions in terms of the advice that we can give. We didn't have any permissions removed or anything else like that, and we've got a much better understanding of what they want. So it was a very stressful time, but through that time, we were able to build up a good relationship, understand what the regulator want, and really push forward. So it was challenging, definitely, but it was also kind of a blessing in disguise.
Yeah. Yeah, I would think it was. It's probably a bit of a blow up front where you think, "Oh, this is stressful. We've got to prepare for all these different jurisdictions, and they all have different regulations, etc." But I guess once you get it out of the way, your business is set for a long time, unless things change.
Let's hope so. Yeah.
Yeah, I'm with you on that. Okay, and in terms of technology, you mentioned a little bit about the wealth app that you're putting in place. Is technology planned to be a key part of your business moving forward, and any other plans as well?
Yeah, so no, I'd say, look, we are a business that blends technology and tradition. That's what we're trying to do. Is we don't want to be a faceless technology business, which you can only get hold of someone through an app. But at the same time, we don't want to just be a financial planning business that does everything on ink and quill and has papers knocking around everywhere. And we realised that,
Fax machines.
yeah, exactly. We realised that operating as a financial advisor, people do want to see the whites of your eyes and they do want to deal with people. But at the same time, they expect instant access to everything they do. With Deliveroo now, you can order a pizza and track it from where it's been made all the way to your house. I mean, for something as low cost as a pizza, why can't you do something similar with your financial planning or your wealth planning? And there's not really, if you think about it, too many businesses that do that. So our aim is to try and demystify financial planning and break the back of that and be able to offer it to the masses, which means ingraining and in building technology into our processes to ensure that we can overcome restrictions in terms of how we onboard clients, how quick we onboard clients, and also give them the tools at their fingertips to be able to push through and to build.
Yeah. I guess it all goes back to trying to provide that balance really between a personal touch and also some technological innovation as well. Yeah.
Yeah.
Okay. And I also wanted to ask you as well about some of your experiences in management. How has your managerial style evolved over time?
Yeah. I mean, look, I think I was pretty harsh when I first started. I used to believe that everyone should be like me and want it as much as I did. And then I soon came to realize that not everyone is built the same. And just because people don't necessarily want to work 15, 18 hours a day doesn't mean that they aren't important. And, different people have different wants out of life. So I was pretty harsh with people when I started my role as a manager. And I feel like I've got much softer over time. That's partly, I think that's just number one, growing up and being more mature. I was in my early 30s. I'm now in my late 30s. Um, when I very first started out as in financial planning, I was 23, 24. So, you definitely are grow and evolve over time. Also, humbling experiences from my wife as well. I think she's my biggest fan, but also my biggest critic as well. So that always helps bring you back down to earth and having people around you that can ground you really. But I feel that I've become a lot more chilled out over time. And I appreciate that, people want a work-life balance and people want different things out of their life. And it doesn't mean, it doesn't mean they're any less. It means that, they just want different things, but they can still provide a lot and be there to help you grow too. So yeah, so that's one key management lesson that I've learned, which is probably to be more accepted.
Do you think some of those early days mistakes were kind of carved by the fact of previous experience working for other financial planning companies where things might have been very hard targets, kind of a difficult work environment? Do you think some of that might have?
Be Maybe, yeah. Look, I think that it was, I suppose the environment most companies 10 plus years ago is much different than it is today. So, I definitely think we've evolved and we feel we know how important it is to put culture first and to build with the right kind of people and to and employ the right kind of people as well. Um, but yeah, like, I think it's been an evolution, and I think we are in a very good place with who we want. We have a very clear definition now of what works for us and the type of people that work well with us. Whereas before it was kind of just try and bring in everyone and anyone at the start. But I think as you become more mature, you can become more selective.
Yeah. In terms of recruitment, do you have a select type of skill set that you expect everybody to possess? Obviously, everybody's a lot different in the way that they have their experience, but do you have some common traits that you usually recruit for?
Yeah, those three core values, which we call the three Ds internally as well, but which is discipline. I don't know whether I can say I don't know if I can say the last one, but drive, and the last one is don't be a dick. So it's, discipline, which is hard work, drive, which is making sure that you've got a growth mindset and that you want to grow. And obviously no ego, being the don't be a dick. So, that they're what we really look for. I think most of the stuff can be molded. Obviously, if you're giving financial advice, you need exams and everything else like that. But they're the core things that we want to make sure that people have got when they join our business.
Those are the kind of non-negotiables.
Exactly.
Yeah. Okay. And I've heard that you've done some acquisitions for Hoxton Wealth. Can you talk a bit more about those acquisitions, why you made them, and what kind of synergies and comprehensive services do they provide to the company?
Yeah, so I'll kind of give you some background as to why we've made them. Because I always think acquisitions, it's important to understand the overall strategic importance of them to the business. So we've got a strategic plan in 2027 that we want to have the business manage £5 billion of assets. That's where we want to be. So we realized that just growing organically like we have done, we won't be able to do that. So therefore we need to develop an inorganic strategy, an acquisition strategy for our business. You know, so the acquisitions that we've made have been to support that inorganic strategy. So we are international, but as I said, a lot of our clients do reside in the UK, and building up a strong domestic UK footprint supports that international business. It provides comfort. You bank with HSBC, you're comfortable because they were a good bank from back in the UK and you can use them globally, but it's that strong UK footprint that probably adds a lot of comfort. And it will be the same with our clients. So there is the average age of a UK financial advisor at the moment is 57. And I think there's over 5,000 financial planning businesses. So that there is a lot of financial planning businesses in the UK, which means it's a very fragmented market. And a lot of them are coming up, a lot of them are coming close to retirement. So there is a lot of consolidation in the UK financial or wealth planning space at the moment. So it made sense for us to, when we start this, is to go with a clear legal framework in terms of, how we go about acquiring those businesses with, strong legal footing, as we do have in the UK. In terms of pricing, it's very clear, it's very, what you will buy these firms for. You're never going to get them ridiculously cheap. You're never going to pay over the top because there's so many of them around. Deal flow is not difficult. So you know what the price is. And then we can acquire them for, we don't have to spend £2 billion acquiring another company. We can go and buy these companies for, hundreds of thousands, maybe low digit millions, and bring them into the business. So we've been focusing on people that are retiring. We've been focusing on people that are looking to exit the profession and are looking to hand over the reins of their clients to someone that they can trust and that they can work with and that they get a good feeling about. And that's really what's important to a lot of these people. It's not actually the most money. It's how their clients are going to be treated when they're gone. A lot of them are personal friends. They've been working with them for years and years. So it's super important to them to find someone that they believe can work well with them going forward. So that's what we try and provide. And we've done a good job of it so far. We've acquired 4 businesses. We've got another 6 in the pipeline that we're looking to hopefully complete by the end of the year. Cutting it fine now, but there will be a big rush with them in. And yeah, it's an exciting time for us, and it's a part of the business that we haven't done previously.
Mm. And I guess with those acquisitions, obviously you've not only got to find companies that suit your need and maybe give you a niche into a market that you didn't have before, or a particular service, or the reason why you acquired them in the first place, but I guess in terms of culture, they've got to kind of blend into your existing structure, right?
Yeah, yes and no. So it's really important to integrate them from a client's perspective and for it to seem seamless. You don't want to be upsetting them or not to have the information that they gave to their previous advisor and to be starting again. But with a lot of these guys, we don't really have to worry too much on cultures because with a lot of them, they're retiring and being small 1, 2 man bands, they're looking to exit. So it's really the handover to us. And then we have our own team that go in and, integrate them into our business. So, and that's where it can normally, and that's where it normally breaks down is when you're trying to integrate other people's cultures into your culture and there's not an alignment. As you said, it's difficult. So, we gave that some thought when we were starting as to, what we wanted to do and how we wanted it to fit. And that was the best way that we saw. We obviously stand to be corrected, but yeah, that's how we want it to work.
Okay. And some exciting stuff now. I wanted to ask more about what your future plans are in the future. So I thought I'd break this question down into 2 areas. One, what is your plans over the next 5 years? But the second one is, what are your plans over the next 10 years? And the reason why I asked that is because I think in terms of 5 years, you always, because it's a bit closer, you've always got an idea of what you want to implement into the business now. But over 10 years plus, you start to be thinking a lot more long term and where you want to be.
Yeah. I think over the next 5 years, we've got a very clear goal. So by the end of 2027, which I know isn't 5 years away, it's a bit less than that now. But when we started, it was to get to 5 billion of assets. That's where we want to get to. In the next 10 years, I would hope that we can become the number one international financial planning business and a very big player domestically in the UK as well. We, our business has been going 6 years and we've been able to exponentially grow it. I believe that I believe that you massively underestimate, or I'm a big believer in, you massively underestimate what you can, what you can achieve in 1 year normally, but you massively underestimate what you can do in 10. So, I have big, high ambitions. I believe that we can be a household brand name in 10 years, but it takes consistency and it takes being great every year and not letting up and letting the basics slide. So, yeah, so hopefully that we can make that an achievement and then a goal, but, really it's to keep doing the same thing as we're doing today, which is delivering good client outcomes.
Yeah. Well, you're doing well so far.
Thank you.
So how do you see yourself kind of getting to that target? Do you see more of an expansion in your existing businesses that you have in the countries that you're operating in now? Or do you see a lot of that growth over the next 5 to 10 years coming from opening new offices and accessing new customers?
Yeah, I see it as this really twofold, I suppose, way to answer your question. Number one, we will build a bigger domestic UK presence. Number two, we will build out a presence in Asia and then keep growing the existing. So it's going to be a combination of all three.
Okay. All right. And one of the questions I didn't ask you earlier, I heard that there's been a lot of migration of millionaires leaving kind of Western countries, so the US, UK, Australia, and moving over to different countries. Some of those people are quite wealthy, and some of them are people who have gone over as expats to work as well. Um, what countries are they generally going to, and what is the kind of reasons behind these moves from your experience?
So I actually got interviewed on the BBC for this recently, that exact question, which was, we're going to see a lot of people leave the UK. And like you said, a lot of people leave the US, especially those that have been what we class as non-doms. So not, typically UK citizen. They moved there for a certain reason and now they're not with Labour coming in. So we have seen a outflow already and we are likely to see an even greater outflow of, they abolished the remittance rules. They're going to different countries. So your typical Singapore, Switzerland, Dubai, obviously is in vogue now, but then also places in Europe. So like Italy has got a very favorable tax regime that we're finding a lot of Europeans are looking to go to, which, which is obviously great for Italy. Then we're also seeing the US, Florida, actually people moving from the UK over to the US. Now, who knows, obviously with what's happening politically there this year, whether some people decide to move out or not, probably anyone's guess. But yeah, it's we're seeing quite a merry-go-round, I suppose, is the best way to describe it. And a lot more people are looking to move now and becoming a lot more tax savvy.
Yeah. I guess some of that's tax related, and then some of it's where just generally nice places where people want to live. And I guess thirdly, probably important what passport they have and what countries they have access to be able to travel fairly visa free or get residency.
Yeah, I think if you're in the UK and US already, you're not going to struggle to get, into most of the country that you probably want to get into.
Yeah. Yeah, I agree with that. Yeah, it's an interesting trend. I've seen some charts on that in the past where you see a lot more millionaires moving over to places like Dubai and Singapore than millionaires moving into US and the UK, especially the UK with obviously what happened with Russia and other countries as well. Yeah. Excellent. All right. So, Chris, how can people find out a bit more about you if they want to find out about you as a person and also more about Hoxton Wealth?
Yeah, they can follow me on LinkedIn. That's probably the easiest place to find me and to see what I'm up to. And then, for Hoxton Wealth, it's www.hoxtonwealth.com. That's the best place to get all the up to date information on us as a business.
Do you have any parting words or any parting views for the listener on financial planning or anything that they need to consider?
Yeah, I think those three things which we mentioned earlier, which was try and keep fees as low as possible on your investments. Value, I think, is probably the best word to describe it. Make sure that whatever you're getting charged is representing good value, making sure that you don't get involved in that lifestyle creep and try and spend less than you earn. And, for people that are long-term investors, try and block out market noise.
Perfect. Well, it's been a great discussion today. I've really enjoyed talking to you. And I think the viewers will get a lot out of this discussion, both from an entrepreneurial point of view on starting businesses and managing businesses, but also on financial planning, because everybody needs to save for the future, right? So Thanks for joining today, and I will put the details on how people can find out more about you and reach out to you in the details of this YouTube video. And I hope I can have you on again sometime in the future to get an update on how the business is going.
Yeah, great. Love to. And thank you so much for having me. It's been really good fun. And I look forward to speaking to you again soon. Thanks very much again.
Perfect. Thanks, Chris.